Thank you and good morning. Having worked over 30 years really in technology management and innovation, I find this is the most interesting time to work in financial services, because digitalization really puts the client at the heart of everything what you do and at the center of the business model. So it really starts with getting a good understanding, and I try to make this work, about who the digital client is. How do we differentiate the behavioral and preferential profiles of the clients? Because it's not just the one digital client and the old traditional clients. There's a lot of meshed profiles in there. Today already we have about 17 interactions that the average retail customer has with its bank per month. And those are mainly digital channels and ATM interactions. In fact, 35% of those interactions are done by the mobile. And whilst that share is higher for retail clients and for millennials, we see it growing year by year. And with that growth, the expectations of those clients towards banks are rising because they have all those experiences with other brands, and they transport those expectations to our industry. So we need to get our act together on this and become better, because where we fail to address those expectations, it's fintech attackers, it's new entrants to the market who have shown us how they can build very good client interaction and experiences that, especially at the interaction level, can actually disintermediate us or be a competitor to our services. And we will see those expectations rising further. It's the whole 24/7 availability of services. It's the ability to manage risk profiles and data. The new generation has different attitudes towards those things. They would easily trade in data for more convenient services. So you need to find different ways of how you put out access to digital tools and services. And we think a lot about that because it's important that we address all of those. So banks have to be omni-channel in their approach to how we serve our clients. And there's another aspect too, because it's not just the existing client base that we look at. Also, digitalization is giving access to new segments. We have in the developing countries the unbanked population, which we've seen through mobile phones have really gotten access to payments and to savings and to services that they couldn't cherish before. But also in the traditional banking space, we see that for retail and affluent clients, services that were previously just for the wealthy, wealth advisory and others, are being democratized, are becoming more accessible. Because the digitalization creates accessibility and it lowers the cost because there's significant economies of scales in there. So this is, I think, a call for us also in our industry to look beyond what we're doing today and perceive digitalization as an opportunity, and to think about the new trends and the desires of digital clients in the economy, because they really want wealth assistant. They don't just want transactions, payments, or maybe investing money and get a bit of profit on that. It's about really helping them navigate the system and thinking holistically about how that affects life decisions and their planning. That means that we should and can take the abundance of data that is out there to be deploying predictable services, to have analytics helping us to anticipate needs and to produce tailored, well-priced decisions, because we can access and evaluate the creditworthiness of clients with the new tools so much better and create really better solutions going forward. But as more data is given away by clients to have these digital services, they also are increasingly concerned, especially the older generation, about their privacy. So there's a natural role for us as trusted institutions to step up and help clients to manage their privacy. How do I, as a client, store my data? How can I actually transfer it? What's my right to commercialize data that is usable or that is creating a value for other companies? Those are questions that we have and where we can think about how to address them. When I use blockchain technology and I invest in digital currency, I get a private key, my personal identification that is the unique access to my money. And if I lose it, my money is gone. So who keeps, stores, and insures that key? There's really valid new propositions that we should think about. Open finance is another trend and another need for clients because they have learned in the sharing economy that they can pick the best and that they can assemble their services. Who today goes to a travel agency to book a full package? It's less and less people. People go on booking platforms and assemble their trips, and later on they share their experiences. So platforms and sharing economy has become a part of everybody's life. And more so, this is applied to financial services as well. So that means that we can also make use of building platforms, of aggregating services, and of embedding third-party services into those platforms to create that top-notch and special experience and offering that our clients seek. And this goes beyond banking, because it's not just the banking products that we sell, it's that understanding and being a partner for our clients in life and in growing their wealth. And interestingly, the digitalization is also creating new markets and new products. When we think about digitized assets, where you can now represent intangible or tangible goods as in a digital format, created and marketplace and traded globally. So we want to support clients on that journey. And it's not that difficult. A lot of the technology to do so is already there. The mobile technology is everywhere. A recent survey said that clients would be more concerned about leaving their phone at home than their wallet, because this essentially is everything. You pay, you manage, you do business, you communicate, and we should actually stop calling this a phone. This is a personal computer, or it's enabling me to be. And with the IoT developments, this will only explode more. Billions of devices will be connected. We will see microtransactions, machine-to-machine transactions happening. And we will need to understand how we can help clients to manage their devices, their autonomous cars that pay at the toll gates, that pay their insurances. And payments and banking interactions become increasingly invisible. We lose a touch point to the clients, but we also can help them to manage their devices. And finally, with automation and artificial intelligence, which is probably one of the biggest drivers for our industry, we are well set to really take this forward and deploy robo-advisory services, virtual assistants, chatbots. At the end of the day, with these new biometric technologies, the payments, the invisible payments, you just show your face, you speak, or you have your fingerprint. It becomes all much more seamless, and we need to understand, at the end of the day, you're embedded in a digital ecosystem where payments are a reason for something else. Nobody wakes up in the morning and thinks, I want to bank today. They want to pay or experience or do business. Blockchain will put this on another level, and I think it would probably deserve a whole deep dive to go into that and explore it further. So I'm going to leave that for the discussions later on. To wrap up, it's really about us considering how we enable the digital economy for the client truly. And that means that we need to address the obstacles around cyber threats, around security. It's critical that we get that right, because if we don't, we'll get significant backlashes. And then it's about clarity on data protection, the portability of data cross-border, and the ownership of data that we assemble or that is even already available publicly, and how we can make use of that. The enablement of digital identities, not just within banking, but cross-industry and cross-border, because people will require this. There are multiple identities that they probably end up having to truly interact in a safe and secure way. And last but not least, banks as well as regulators and others surely have needs to educate financially and to support further digital literacy. Because whilst the native natural digital segments are growing up and are really very well suited to use them. We don't want to leave other parts of the society behind, so this is a task for everyone.